Welcome to FinanceFeeds Podcasts. FinanceFeeds is the world's premier interactive Forex industry news source, providing the latest insights and current affairs from within the online trading industry worldwide. Enjoy our latest podcast episode. Welcome, everyone. It's FinanceFeeds Podcast. My name is Nikolai Isayev. I'm editor-in-chief of FinanceFeeds. Joining me today is Simon Grunfeld, who's head of Web3 at Cogni. Simon, welcome. Thanks for joining us on our podcast.
Thanks for having me, Nikolai.
So, Simon, we haven't seen each other in so long. I wanted to just quickly catch up with you and find out what you've been doing over the last few years, maybe prior to joining Cogni, and how your 2022 has shaped up so far.
That's a loaded question, but thank you. So when was the last time we spoke? Because it was a while ago. I've been through some, in the world of crypto and blockchain, things move really, really fast. So things happen very frequently. So I'm trying to remember when was the last time, just so I need a starting point. Is my point.
I think maybe, to be honest with you, last time we saw each other in person was maybe 2018 or 19. We had
Okay.
a meeting of the so-called Blockchain Association back then.
Yeah, I remember that. Okay, so I think at the time I was spearheading. So at the time I was leading a company that I had formed called Ibanix.
Hmm.
That company was sold to a family office in Israel. Um, yeah, it didn't really go anywhere. Total disaster, to be honest with you. The people who bought it, the family office behind it, weren't able to do anything because of certain regulatory actions that were pending against them, and I believe still are.
I
So
see.
nothing really came out of that, unfortunately. After that, I joined a digital asset group here in New York called Epiphany, and we were building all kinds of really funny, interesting stuff. We were actually the first platform to tokenize real world assets. So before NFTs, okay, so this is before non fungible tokens.
Hmm.
We were the first ones to actually do anything related to collectible items, and specifically collectible items like Supreme hoodies, Air Jordan sneakers, Travis Scott collections, things like that. And we were doing like standard ERC20 tokens, allowing people to buy these tokens, and if they accumulated enough of them, they could redeem them for the underlying asset. So
Hmm.
we had boxes and boxes and boxes of inventory in the office. We had this whole supply chain management system set up. It was pretty crazy. The problem though there was scalability, and we couldn't scale simply because by definition, these were limited edition items. So we couldn't really get enough of these items to fulfill, in which case we were left with a lot of cobwebs in the office at some point.
Hmm.
COVID came around, a lot of people went home, myself included. At that point, I started to see where NFTs were going. So I did some consulting for one of the largest exchanges out there called Vivi. And the Vivi Marketplace is an NFT marketplace that caters to the likes of Disney, Marvel Comics. They do a lot of things with Paramount Plus, Star Trek, things like that. And then after restrictions started loosening up a little bit, I started getting back into the swing of things. I took a role with a company here in the US called Simba Chain. They were trying to do a token issuance, and they brought me on board to try to help them with that.
Hmm.
In between, we also filed a patent around a new method to issue tokens compliantly under US law. One
Hmm.
of the people on my team. So when we were forming this whole token rollout, we had a team of very, very smart people, a lot of degrees. I'm talking about two math PhDs, one economics PhD. These are all full-time people, by the way. We had a lawyer, and we had a former commissioner of the SEC, who was part of my team, who
Hmm.
was an active participant in it. And actually, the entire model is based on his recommendation. So we put a bunch of math together, statistics, and we came up with a method that allows us to distribute tokens compliantly here in the U.S. without having to file as a security.
Hmm.
Um, but that gig ended in June. I've been with Cogni ever since, and Cogni is a really interesting situation. We're about to do some really interesting stuff here, man, and I'll tell you why. This, over the last few years, we hear a lot of companies that are saying we're bridging the gap between Web 2 and Web 3. We're bridging, everybody wants to bridge this gap. Everybody's a bridge provider. Okay.
Hmm.
And you start digging into it and you start asking the question, well, what are you bridging exactly? Well, some companies will say, well, what we're doing is we're moving your database from a centralized to decentralized database. Okay. So companies that do supply chain management, for example. Okay, we're going to take this database that you've been using for the last 20, 30 years and this method that you're doing, and we're going to make it better. We're going to make it better because we're going to make it decentralized. We're going to put it on chain. A
Uh-huh.
lot of these things sound really good in theory, but then when you start using it in practice, you find out that you're causing more problems than you had to begin with. And that the problems you thought you were solving, you're not really solving them. You're just changing them a little bit. Now they become Web3 problems versus Web2 problems.
Mm-hmm.
At Cogni, we are bridging the gap between Web 2 and Web 3 from a banking perspective, number one,
Mm-hmm.
in the sense that Cogni is rolling out next week the very first non custodial crypto wallet and banking app. That means that Cogni, as a neobank right now, today anybody can go to getcogni.com, sign up for a bank account, and the same day you're off to the races. You have a bank account, a mobile bank
Sure.
account. Okay.
Mm-hmm.
You
Yep.
can collect your payroll into it. You'll get a debit card in the mail. It's basically like a bank, just no brick and mortar locations. Okay.
Correct.
But now we're adding on top of that a non custodial wallet, which means that as part of your banking experience, you can now custody crypto, send and receive crypto in your wallet where you, not Cogni, but you, the user, owns those keys. It's your keys.
Mm-hmm.
If you don't like our app for whatever reason, take those keys to another wallet, pull it in, all your assets return wherever it is. We have no control over that.
Mm-hmm.
Very much like the fiat side of the house, the Web 2 side of the house. We really don't have control over that. We're everything, every single dollar that is deposited by our users is FDIC insured.
Mm-hmm.
Now, what that means is that the FTXs of the world, the Voyages of the world, the Celsius of the world, all of that is non-existent in our world. We don't have to ask users to trust us because you're in full control of your own crypto and your fiat deposits are all FDIC insured.
Mm-hmm.
So if we decided tomorrow to go belly up for whatever reason, you're going to get your money back, and your assets are yours to move to wherever you want to move them to. Your digital assets, that is.
Sure. Mm-hmm.
Okay.
Mm-hmm. Yep.
This is true bridging in the sense between the Web 2 and the Web 3. We're bringing the best of both worlds, the security you have with FDIC and the knowledge that you have that we can't hold on to your crypto, take them, sit on it, move it, do whatever we want with it. It's yours and yours alone. And we're putting all that together inside of one application.
Mm-hmm. And since we're on the subject of Cogni and this mobile app, or I'm sorry, banking app rollout, I assume that I'm able to also transact in crypto versus fiat. In other words, if I want to take part of my paycheck and basically exchange it for crypto, I could do so inside the app.
Phase 2 is coming out in Q2 of 2023.
Uh-huh.
Phase 2 will allow users to, once they receive fiat, if they wanted to sell it for Solana, Bitcoin, Ethereum, any of the EVMs that we're going to support, absolutely. And then vice versa. That's another huge advantage that we have.
Mm-hmm.
Right now, it's very easy for a user to download a wallet, pull out their credit card, buy $100 worth of crypto. Okay, you have
Right.
that crypto. Now what do you do? Now if you want to sell it for whatever reason, good luck doing that through the wallet that you just got. Through our platform, you can both buy and sell crypto to fiat, fiat to crypto, or crypto to crypto. We're also going to be doing an integration with a swap mechanism or an aggregator. So if
Mm-hmm.
you're looking to just move from crypto to crypto and you're looking for the best rates, we can also provide that as well. But that's also coming out in Q2 of 2023.
Mm-hmm. And listen, since we started on the topic of Cogni, can you take us through a little bit more in terms of how Cogni kind of came about? I mean, one of my questions that I was going to pose to you is in the Web 2 world, right? In the fiat world, we have mobile banking apps like this or mobile banks today. SoFi comes to mind, probably a couple of others that
Yeah.
I generally see in the media and just, in the financial space. Kind of what makes Cogni stand out as opposed to these fiat traditional neobanks, as we call
Sure.
them, outside of just the Web 2 versus Web 3.
So yeah, so I would be first off, I would be careful to try to compare companies like SoFi to Cogni as a one-to-one, and there's a lot of reasons. Number one, SoFi, it's non-deliverable. So those are more like CFDs. If you're investing in crypto through SoFi, you don't actually get delivery of your crypto.
Oh,
You don't
sure,
really
yeah.
own it.
Mm-hmm.
If you buy $100,000 worth of crypto of SoFi and SoFi decides to go belly up, good luck getting your $100,000 worth of crypto from SoFi. Okay.
Mm-hmm.
You buy $100,000 of crypto through Cogni, it sits in your wallet. If Cogni goes belly up, you still have your crypto. You want to use a different wallet, you have your key, pull it into a different wallet, It's still yours. It doesn't
Mm-hmm.
belong to us.
Sure.
So that's a huge differentiator. Go ahead and ask the creditors right now running after FTX, trying
Or
to get the
Celsius. Or
or Celsius
Celsius.
or Voyager or 3 hour capital, or again, I can go on and on and on. Okay.
Sure.
BlockFi. Okay. So that's on that side. Now let's talk at the fiat side. I don't know enough about SoFi to make this assumption, but show me a platform that is providing FDIC backing to the principal deposits. And to my knowledge, you're only going to find one company. That's us that's doing that. We are the only
Mm-hmm.
ones right now that can provide any kind of assurance on your deposit. Nobody else can do so. And
Mm-hmm.
for good reason, because they're speculating with your funds. We don't do that. We are a bank, or we're a banking platform, I should say. We
Okay.
have a bank behind us that is supporting us, and they're providing us with all the technology. We provide a lot of the KYC AML. We do a lot of the compliance and regulatory oversight. Of
Mm-hmm.
course, we have them checking and rechecking everything that we do, but everything is held within FDIC insured accounts, protected by the federal government.
Mm-hmm.
So
And
I would say that there's a huge differentiator between us and all those other guys you just mentioned.
mm-hmm. No, that's pretty awesome. And I'm assuming that was part of the strategy when Cogni was coming about, was
I don't
because
know that.
I
Yeah.
would think that takes a long time getting FDIC, whatever it is, approval, license, whatever it's called, right?
Yeah.
From a regulatory standpoint. So
So
that takes
so
time and resources.
it does take time and resources to get that part done. But I think that it was just a series of events that led to us coming to this part. I mean, clearly, I wasn't at Cogni in the beginning when it was conceived,
Mm-hmm.
but I joined this summer long before a lot of these blowups started happening in the crypto marketplace.
Mm-hmm.
But because of my experience and the things I've done in the crypto, and yeah, I'll be very clear, I've worked a lot with centralized platforms. So I understand the loopholes that platform providers are using to manipulate their users. So, how can we take an approach here where we don't need to ask people to trust us? They will just trust our process. Like, don't trust Simon that I'm not going to run away with your money, because guess
Mm-hmm.
what? I don't have access to your money.
Mm-hmm.
Okay, everybody out there is saying trust us because we have, the best accountants, we have the best compliance, we have the best looking people. Whatever their logic is, you don't have to trust Simon. You just have to trust that we have a bank that's federally insured. We have provided you with a Web3 wallet that you own the keys to, and you can take it wherever you want to. And that's it. We're not asking anybody to do something that takes them outside of their comfort zone.
Mm-hmm.
So
I would say, when you mention some of these things, like how does a company or a brand that's in the crypto and the banking space, um, instill trust or confidence in people. I'm just looking back at the Celsius case, which was, the founder and I guess some of the people that were executives in the firm, as far as I remember, toted a lot of their previous experience to say that, if you deposit your crypto or your fiat and then turn it into crypto with us, I mean, you are working on a platform that has the expertise of,
mhm.
many rounds of investments, many inventions and things like that. Alex Mashinsky saying, unbank yourself and all of these different things. And, as a person who has a marketing background and things like that, I looked at that and said, okay, well, that's an interesting gimmick to I'm not going to say play, but that's an interesting gimmick to use to market your service. And then, the flip side of that, I think, was returns. All of these companies, or at least the Celsius of the world, heavily marketed the fact that if you deposit crypto with us, this is how much you're going to be paid,
Right.
interest, right, on a monthly basis, weekly basis, whatever it may be. And at the end of the day, greed is still good, right? And people took the bait, in a sense. I would say, right, and
Yeah. So we're not making any
deposited
kind of
money.
so so on that note, a couple of things. Till today, a lot of the former Celsius people, you ask them, how did Celsius make money? And they're still kind of scratching their heads. I know how Celsius made money. A lot of people don't want to talk about it because it's going to involve different types of regulation that's going to have to kick in, specifically
Sure.
from the gaming industry, okay, and not in the U.S. But I kind of let's get to the crux of this. Sam Fried, the former FTX founder and CEO, Both of
Hmm.
his parents were regulatory attorneys, right? This was
No
a
idea.
thing.
No
Yeah,
idea. I don't know.
that both of his parents were former regulatory lawyers.
Hmm.
So if
Okay.
you're a lawyer in the regulatory space and you marry somebody who's a lawyer in the regulatory space and you have a kid, yeah, the logic says that this kid is going to be as narrow as whatever. I don't
Straight
know.
shooter.
Yeah, totally straight shooter. History has shown us otherwise. So this is again a reason why I'm taking the stance of don't trust me.
Hmm.
Don't bring your crypto to me because you trust me. Don't bring your accounts to me because you trust me. Bring your accounts to me and your crypto to me because it will be safe and secure in yours and yours alone. That's why you bring your business here, because
Hmm.
we are hands off on the fiat side and we're totally hands off on the crypto side. We build tools to help our users in the sense of, well, here's a marketplace. This is where you can use the crypto. Or
Hmm.
here is if you want to buy gift cards for people using your fiat, or if you want to collect your money. Or we actually, within our app, we also have a carbon footprint tracking. So we're trying to provide tools and utilities that makes life not just interesting, but for the average user experience when it comes to their banking, it's pretty lame. It's like, what else can we push them? We're not trying to push products onto our users. We're trying to establish a community and grow the Cogni ecosystem
Hmm.
around valid and stable products and services. And it all boils down to don't trust us, trust our process, trust what we're doing and how we're doing it to comply. That's it.
Hmm. Hmm. One of the value propositions that I think I saw on the website was also lifestyle services. Can
Mm-hmm.
you talk a little bit more about that? What do those entail, and kind of
Yeah.
what users are you trying to target with some of these services?
We have a lot. So we have some interest right now from very large brand names. Not so much in the U.S., but they are a brand in the U.S., but they're mostly overseas, and they're trying to enter in the U.S. And we're right now we're mapping out. We're in final stages of mapping out what these what these partnerships are going to look like. So for example, I'll give you an example of one of these guys. So
Hmm.
one of them is a very large pop culture brand that deals in lifestyle clothing. Okay, so
Okay,
think of it as like your Supreme. Okay, but not Supreme. Okay,
understood. Hmm.
just as an example, Supreme. So that's a
Hmm.
lifestyle. People identify, and that's why people wear certain brands that they wear. So we want to adhere to that, and we want to encourage that, and we want to help them. The fact that they are loyal to that brand, we want to help grow that. And the only way we know how to do that is by bringing those brands into our marketplace, into our ecosystem. And by virtue of either through NFTs or metaverses or what have you, they can then explore these different aspects of the brand. So again, as an example, we bring a brand in, they create an NFT drop, which gets dropped to all of our users because all our users have wallets now attached to their bank
Hmm.
accounts. So now they
Hmm.
can get all those. And then by virtue of holding those NFTs, they now have access into various metaverses, either in world metaverses, which again, they'll use their wallet to connect, or they actually in person, in real life. They can go to any of these events that these brands are throwing and basically just display the QR code of their NFT and then verify that it's actually them.
Hmm.
So it's really meant to look at how Web3 can enhance lifestyle based on certain choices that the user has made. Um, Honestly, I'm probably not the right guy to talk about it. Probably our head of marketing is a little bit more equipped, but I think you get the idea at a high level of
No, I
what
do. I
yeah.
do. Yeah. I think that it's inevitable that there will be a connection between, like you said, brands, unique experiences for customers or potential customers of those brands, and companies like Cogni and others who are essentially facilitating an ecosystem where all of this.
Right.
All of this sort of comes together. Again, it reminds me of some of the fiat stuff that we all know. Your traditional bank can offer you certain incentives for either making purchases at a, again, we could call it lifestyle brands, or at some merchants, right? Or they can
Mhm.
give you extra incentives, or unique experiences that you can partake in, had that you can't get elsewhere, in a sense, I think,
That's
right?
exactly it. So
Hmm.
one of the other things that we're doing with at least one of these other brands is that, again, by virtue of having one of these NFTs, you now have access to like an exclusive area of their website. So
Hmm.
if you wanted to buy specific items that are dropped just for their loyal customers or their VIP customers or their NFT holders, then you can access the website and you can purchase those items, which again are only limited to holders of those NFTs. So
Hmm.
that's what it is. It's about building the community, but also that exclusivity around it, and making those I guess, brand loyalists, making them feel like their investment in that brand has paid off in one way
Hmm.
or the other. And if it's
Hmm.
just giving them drops that are exclusive, or if it's in-world events that are only accessible to people holding those NFTs, and that's their choice. But they have, those brands, they have way better ideas than I do as far as how to actually apply
Sure.
what
Hmm.
we're doing to help them grow their and drive their agenda.
Hmm. I know. Also, I remember you also have experience yourself personally with tokenization,
Hmm.
NFTs, whatever you want to call it, and sports, because I think
Hmm.
you were involved in that.
Yeah,
In that previously, it sounds like that could also be something worth exploring in the future. I don't know. Perhaps you can tell us in the audience. I remember there being projects that you had worked on where well, the athletes themselves were the ones who proactively wanted to launch a token of their own. I
yep,
recall a certain basketball player. Again, I don't remember names or teams.
yep.
Maybe he was on the Brooklyn Nets. Maybe he
He
wasn't.
was
But
on the Brooklyn Nets. Yeah, we're talking about
there
Spencer
was
Dinwiddie. Yeah,
certain athletes. They
right.
essentially tokenized part of either their contract or something like that. But there was definitely some movement around that, and some interest from the what's the Web3 community now, but
Yeah,
before it was the NFT and blockchain community. I don't know. Does that sort of tie into the future, maybe
to some
some way,
degree.
shape, or form?
Yeah, to some degree, and I know exactly what you're talking about, and this was before NFTs were really a big thing. It was only because of COVID when sports died and stopped, and a lot of the
Hmm.
initiatives, my initiative with Dinwiddie, etc., a lot of these things just basically died out,
Hmm.
and that's when NFTs really started taking off, and then that's when all the athletes started looking at NFTs, not necessarily tokenization,
Hmm.
but
Hmm.
actual non-fungible tokens.
Uh-huh.
And at Cogni, we do have an initiative going on right now with a sports college platform. I think so. One of their investors is actually Tim Tebow, and they created a
Hmm.
platform called Campus Legends. And Campus Legends and Cogni are now working together. Also, a lot of these things are still being mapped out, but with the intent of catering to college students, also college students that may want to um, sort of get in with athletes that are currently playing at colleges
Hmm.
and get their rookie cards today when they're playing in colleges. And it doesn't have to be at their college, it could be somebody from another college that they really like and they want to get their NFTs.
Hmm.
And then allowing those athletes to go from college level to professional and then have a client base, even though it's their fans, but it's a base to begin growing their own community.
Hmm.
So, maybe they're going to be super successful, maybe not, who knows? But through Web3, any college athlete today can effectively grow their own community from the
Hmm.
ground up
Hmm.
with very little resources included. So that's another example of some of the initiatives that are happening. Other than that, I mean, you're looking at the regular traditional stuff of just sports betting and how crypto gets involved in that. And I'm not going to talk about that because then we're kind of steering into the land of Mashinsky. But
Well,
instead,
yeah, okay.
but no, but instead I'll say that we're finding new utility for non fungible tokens. Here at Cogni, we have another initiative that's kicking off next year, which has to do with identity as a service, portable KYC as a service, as it pertains to non transferable NFTs.
Hmm. Can you
So
talk a little bit more about that?
I
Our
can, yeah,
audience is
yeah, no problem.
probably lay people who might not understand
No problem. I can
what
talk a
that
little bit
really
about
means.
that. This is one of the hottest topics out there in Web3 right now, which is identity, digital identity.
Uh-huh.
Let
Okay.
me tell a little bit about what everybody else is doing, and then I'll tell you what we're doing.
Okay.
So everybody right now is trying to figure out how to best provide digital identity services to Web3. It's a big problem. Anybody can get a hold of a wallet today and then begin browsing the internet and interacting with Web3 platforms. Nobody knows who you are. All they know is that you're a wallet. Okay. So that's the beginning of the problem. How can I, a Web3 platform, cater to you, Nikolai, if I don't know that it's Nikolai's address? Well, the more you use that wallet, the more I can start to learn about it. But I'm only
Hmm.
learning about it through our interaction. So
Mm-hmm.
there's another problem. How do I learn about your interactions with others? Okay.
Mm-hmm. Mm-hmm.
So now you have a wave of these platforms that are coming out that are effectively middleware. And what they do is they say, okay, Nikolai, instead of you going directly to your wallet or going directly using Wallet Connect to the platform, connect through us. We'll incentivize you through one way or the other to connect through us. And that's how you're going to browse. Think of us as like a VPN or a proxy, a gateway.
Sure.
Now I'm able to record your interactions. I'm able to see what you're doing, how long you're doing it for. And now I'm starting to build this profile. And because the more you interact with it, the more of this profile I can build. So I can say male, you know, whatever age, let's say
Mm-hmm.
you're 25, 26, also. Okay.
Mm-hmm. Thanks for
And
the
then,
compliment.
and then based in New York, has, likes, games about ducks, doesn't like metaverses about violence or whatever it is. I'm building a
Sure.
profile around you.
Mm-hmm.
And there's a little bit of interest there. Actually, there's a lot of interest there because now it allows why? It allows marketing people to come in and you have a marketing background. It comes, let's say marketing people come in and assess this information and say, well, now I can build campaigns. Now I know how to resell this information. Now I know how to
Mm-hmm.
monetize it.
Sure.
Okay. Then comes Cogni and comes Passport. Passport is the baby that I've been incubating for the last couple of months. And what Passport does, Passport bridges the finesse of Web 2 KYC with portability of Web 3. What does that mean? Remember, we are a neobank. We already do KYC for our users.
Mm-hmm.
We already run through everything. When you come and open up an account with us, you're effectively opening up a bank account. So we record and validate everything that you've submitted. Once we have that and we've approved it, now you have a Cogni wallet. Now what we do is we drop a non-transferable token. That means it's an NFT that you can't remove. You can burn it, but you can't remove it from your wallet.
Mm-hmm.
It's also known as a soul-bound token. I think that Vitalik, creator of Ethereum, is the one that actually coined that phrase, soul-bound, because it's
Uh-huh.
attached to your wallet. It never leaves.
Uh-huh. Uh-huh.
That soul-bound token effectively allows any Web3 platform out there to validate that your wallet was approved by us.
Mm-hmm.
And in the event they need a copy of that information, they can then pull that information using the Cogni standard that will allow them to review and validate.
Mm-hmm.
This means that now we have effectively created a new standard in KYC specifically for Web3 companies.
Mm-hmm.
Why is that important? Once the new rules and regulations come out, the days of anybody coming to OpenSea and minting whatever they want, or going to Rarible and minting whatever they want, or going wherever they want, those
Mm-hmm.
days are done. If you're dealing in digital assets, you need to know who's coming to your platform. So all these Web3 platforms out there are going to have a massive problem. How the fuck do I KYC my people? How do I know and verify who they are? Well, we have the solution, and that's the
Mm-hmm.
Cogni Passport.
Mm-hmm.
Every user that comes to us is going to have a Cogni Passport. That means that anytime that they go to a Web3 platform, the Web3 platform will automatically be able to verify that this person has gone through KYC AML, and if need be, request a copy. All this stuff is, of course, encrypted and verified.
Mm-hmm.
Also, the beautiful part about this stuff is that in the event there's some sort of security breach, that means that only one individual's information has been breached. We don't keep everything in a centralized database.
Mm-hmm. Right, because
All we do is we say, this person has been validated, here's some information, and then we take that, we encrypt it, and we put it on chain.
mm-hmm.
For a Web3 platform to validate that means that you have to authorize it. So once you try to connect, you have to sign and authorize it. And then that Web3 platform has to pay a small fee to us, of course, to be able to pull that information down and validate it.
Mm-hmm. Mm-hmm. That's very cool. It sounds very, very forward thinking. If we're going to assume that Web3 and metaverses in general are the future,
Yeah.
then this makes total sense. And that NFT that you spoke about, the soul,
Soul-bound NFT,
the
or the
soulbound one,
non-transferable.
in my Web2 world, I would equate that with what marketers use cookies for, right? Cookies used to drop cookies on your machines, and that's how I would get data on you,
Mm-hmm.
at least in part based on your behavior online, right? What you're doing
Right.
and things like that, so I can target you. This seems a lot more sophisticated and a lot more prudent and um, Yeah, prudent in the future. I think it's very proactive because if I'm a user on Cogni, I'm using your full experience. Let's say in 5 years' time, I want to shop on Target, but the way I shop on Target is not through a traditional Web2 website. It's through a metaverse of sorts that I want to use. And so, if Target needs to validate my KYC information for much faster, quicker, easier checkout using my Cogni app, so that I could basically pay with the funds that I have on Cogni. That seems very 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 cool. Correct me if I'm
No,
understand
no, you're right. I mean,
if I'm understanding this correctly. Yep.
yeah. From the Web 2 side of things, I mean, there's really not that much different that we're doing right now. You can use a debit card, you can use Apple Pay, Google Pay, whatever you want to use. I
Mm-hmm.
think where we're really breaking the mold, and to your point, forward thinking, is knowing that the world of Web 3 is no longer going to continue to operate, won't be allowed to continue, at least here in the US, to continue to
Mm-hmm.
operate without knowing who's coming through its stores. You
Mm-hmm.
go to think of it. You go to any e-commerce site that's
Mm-hmm.
selling anything. If you're
Mm-hmm.
using a credit card, it's asking you for your basic info.
Absolutely. Yeah. Of
Only in
course.
Web 3 do you have a scenario where it's like, just come, do whatever you want, leave, nobody even cares. Those days are numbered. So because they're numbered, we know what the problems are going to be. Tell OpenSea that they now need to create a KYC department. Tell them to go ahead and start doing integrations with all these KYC AML providers that
Mm-hmm.
they
Mm-hmm.
have to cross-reference and onboard their own chief of compliance or whatever it is.
Right.
Removing all of that from their overhead by saying you don't need any of that. Just tell your users to come to Cognitive, sign up for an account. We'll KYC everybody and we'll give them a wallet. We can work out commercial terms with them later on, but essentially it just means that anybody comes to OpenSea or any of the other Web3 platforms, OpenSea will know that it's Nikolai coming in.
Mm-hmm.
Even though the rest of the universe won't know, OpenSea will know that right now you're the one connecting. This is your wallet.
Mm-hmm.
Okay, and that's the beginning of complying with these regulatory requirements. So I was kind of hoping that they would come out by the end of this year. It doesn't look like it's going to happen. These initiatives started, I believe, back in March, is when the Biden administration has asked the Senate to come up with all these new regs. Obviously,
Mm-hmm.
what happened with FTX and all these other platforms um, may be causing a delay. I think that a lot of the lawmakers are now saying, wait, before we keep moving forward with what we put together, let's take a look and see what happened and see
Mm-hmm.
whether or not what we're about to do is result. In my mind, I'm hoping that this is what they're thinking, right? In my mind, I'm like, wait, we're lawmakers. Let's see what went wrong and learn from that mistake, right? But who
Mm-hmm.
knows what they're really doing?
Well, that's going to be one of my next questions. One of the last things I wanted to ask specifically about Cogni, you had mentioned um, some sort of carbon footprint tracker or something.
Mm-hmm.
Um,
Mm-hmm.
that also seems very forward thinking to me as well, because it seems like ESG, or the concept of ESG, is kind of spreading across the globe, but it's spreading sort of on the governance side in terms of companies and institutions and governments. But it sounds like it's going to also impact us as human beings, as individuals going forward, especially in the West, right? Because the United
Yeah.
States and other Western countries have signed on to the Paris agreements and various other climate initiatives over the last few years. I already see ESG requirements, or some form of cooperation in that sense from big business and
Right.
governments. And in my mind, I feel like we as individuals sooner or later are going to be impacted by ESG in the future. And I mean, if Cogni is taking a proactive step to show me through all the data that it has, in terms of what my carbon footprint might be, not in all forms, right? You're not going to track how many miles I drive on my internal combustion engine car, but in terms of basically any interactions I have with the Web3 world and the Web2 world through Cogni, there's some sort of way for me to see kind of, well, what's my actual sort of impact in that sense. Am I
Yeah,
understanding that correctly?
that's exactly it. So we're not we're not in the business of selling carbon credits or buying
Yeah, of
carbon
course.
credits. That whole thing, I think that's a podcast within itself, or a session within itself to talk about that, because that's really Wild West what's going on over there. I wouldn't trust any carbon credit provider today. I can't. There's just so many. It's so easy to set up your own shop like the same day and just sell vaporware and claim that it's carbon credits.
Mm-hmm.
Until the CFTC steps in, it's impossible to tell. There might be people out there really selling carbon credits, saying, "Here, buy carbon credit for $50. We'll go plant a tree." That might be suffice, and that might be happening. I'm not saying that they're all crooks, but there are a lot of
Mm-hmm.
crooks out there. So I
Mm-hmm.
can't recommend one platform or the other. But what we're doing is we're just starting with awareness. Starting with awareness, just making people aware when you're making transactions, when you're doing certain things, it takes a toll. There's a cost to everything that you do, even if it's technology. And
Mm-hmm.
look, crypto was, one of the, it was really the poster child for what not to do if you are trying to maintain a green lifestyle. Uh, Now it's really, I think, more segmented towards just Bitcoin miners because the proof of work to proof of stake around Ethereum
Mm-hmm.
has drastically reduced the workload
Mm-hmm.
by over 99%. So
Sure.
that's great news.
Mm-hmm.
We're not there yet, okay? So we're going to still get there, but I think it really begins with just making people aware what their footprint looks like, just so that they can become aware. Where does it go? Who knows? But it's something that we're trying to just bring that awareness to people, so that they just don't think that everything runs on its own and everything's all magic behind the scenes.
Mm-hmm. Great. That's pretty awesome. So, going back to the topic of regulations,
Hmm.
specifically in the U.S. So, one of your recent interviews with Blockworks, and this is months ago. Obviously, this is before
Hmm.
the FTX collapse. You had seemed pretty optimistic about sensible regulations coming pretty soon, right? If I understood you
Yeah.
correctly. Now, I was just in Chicago a few weeks ago for the FIA Expo, and the keynote panel included the current CFTC chairman, right? And ironically enough, this happened. This was the week after the weekend news of something's going on at FTX and things like that. And essentially, by the time of the keynote panel with the CFTC chairman, everybody was well aware of what happened and sort of the contagion that's about to start because FTX was heavily involved with so many other firms. The thing I got from his speech, and granted, I know that you probably didn't see it, was there was still there was still a lot of confusion as to what was going on, and it didn't seem like the things that the CFTC, the NFA, and other regulators in the U.S. have said so far this year. It didn't seem like that coherent message applied to what was happening with FTX at the time, right? A few weeks ago. I know that the CFTC chairman has since, I think he did a session in Congress. There were some hearings. I think last week, and again, I didn't hear anything concrete or specific in terms of, like you said, there was some proposals made by the regulators. Are we going to run with those proposals quickly now? Because it seems like we should, because we want to prevent another FTX and another
Yeah.
Celsius in 2023. My general impression was that no, it's not. Things are not aligned yet. I mean, the different regulators still have some differences as to how they see these products, and how they are going to regulate them. So I guess my question to you is: has your outlook changed in terms of when you see regulations coming about in the United States and their possible impact or ultimate impact on just the industry as a whole?
As a whole. So there's no question about it that recent events have caused a bit of a ripple effect, and it's taking a little bit longer to get certain things done at a government because of it. That's no question. I guess the questions that still should be answered is, let's say in the case of FTX, well, which jurisdiction does it fall under? Because they were technically set up in the Bahamas. They
Hmm.
were mostly international. They had FTX US, but US customers weren't allowed to trade on FTX proper. They had to go to FTX US. Where were those funds? Were those all accountable for?
Hmm.
This is more of an international incident. And when it comes to international situation like this, like you have to think about it. So jurisdictions like Singapore, like Switzerland, like there are a lot of countries out there that really have their act together, and they give you a playbook. You want to launch an
Indeed,
exchange, you want to launch a token
indeed.
project.
Mm-hmm.
They say,
Mm-hmm.
here it is. Here are the rules. Just follow these rules. You should be okay.
Mm-hmm.
Um, Now, there may be some gaps, and that's where modifications and enhancements, iteration. No product is perfect when you launch it. You have to constantly iterate it. And in this case, I think that it has to do the same thing with how crypto exchanges are monitored. But at the end of the day, same thing in the US. We've had MF Global, great, Enron. I mean, come on, it
Yeah,
goes
yeah, you name it. Yeah,
on
there's
and on
yeah,
and on and on.
yeah. We can go
If,
on and on. Yeah.
if you're going to trust your money to an institution, you should be prepared to lose that money unless that institution is completely hands off. That is the approach we're taking.
Mm-hmm.
Because we are completely hands off everything that you're bringing, and we're only charging you based on any transactions you're doing. Because from our perspective, we just want you to enjoy your lifestyle with Cogni, make a lot of money, transact, trade, make more money. It's more for us. The institutions that we just mentioned that all went belly up, they couldn't care about you. They only wanted your deposit.
Mm-hmm.
That's how they made money off of you, by
Mm-hmm.
virtue of your deposit. So they'll say whatever they want to say, they'll claim whatever they want to claim, and to get you on board. So I think at the end of the day, as long as you're dealing with centralized platforms that have, and I'm going to say it, and I might regret this in the future, but a license to steal, they're going they're going to do whatever they want with your funds that best suits them, not you.
Mm-hmm. Another question I wanted to ask that's related to this,
Hmm.
a big issue of trust, and you mentioned this in the beginning of our conversation, but globally, or in general, how do you think how does the industry retain at least some level of trust? Because it seems like the Celsius situation was very shocking, again, to U.S. and non-U.S.
Hmm.
Investors, right? Because they had investors outside of the U.S. who open wallets and accounts at Celsius, right? There seemed to be from the public's perspective a lot of shock and awe when Celsius happened.
Hmm.
I read through tearful statements made in court in the bankruptcy proceedings. And as all of this is transpiring, boom, you have the FTX situation, which again, there's contagion. We know that other firms have been impacted. Some of them have already filed for bankruptcies as well. Others are still, in business, but who knows for how long? I guess in the near future, how does the industry maintain at least some level of trust with investors and consumers? And how is Cogni going to play a part in that? Let's say next year in 2023.
Yeah. So on the crypto side, more decentralization or adhering to the decentralization mantra.
Hmm.
Uh, you know, your keys, your crypto, not your keys, not your crypto. That's number one. Because it's not the blockchain that's the problem, it's the people are the problem. If you're going to give me your money, you're trusting me, in which case now I have to make decisions that are best for you, right?
Hmm.
Mm-mm, mm-mm. I'm going to make decisions that are best for me.
Hmm.
And that's what these platforms are doing. They're making all their decisions that are best for them. On the fiat side, same thing. If you're giving your fiat to an exchange, and they might be the best exchange with the best budgets and the best commercials and the best everything and all that. At the end of the day, if they go belly up, you're going to have to run after them and try to get pennies on the dollar back.
Hmm.
In the case of Celsius or any of these other platforms, you only hear from the big losers. The guys that, I lost millions of dollars with this platform and they're making a bunch of noise. What about the smaller people? What about the guys that lost 5 grand, which to them is a lot of money? You
Hmm.
don't hear from them. What about the guys that are out there that are thinking because they were sold a bag of lemons by a Celsius saying, "Come, bring your money here. You're going to get a better return than if you just bought bonds." To them, that's savings. Okay, they depend on those funds. So that's who we're catering to. FDIC insurance insures accounts up to 250K. We go belly up. You have less than 250K in your account, you get all your money back.
Hmm. Well, that's actually who I was referring to in those statements that I read in the bankruptcy
Hmm.
proceedings from Celsius. It was
Oh,
actually
was it
the
smaller? Okay.
yeah, it was the small guys, because these are the people that relied on this money as a form of savings that they
Yeah.
would withdraw from Celsius, believing some of these marketing messages of making 17% a month interest on their deposits and things like that. Those the specific people who now, I believe one of them said something like, I have a family of three. I don't know how I'm going to feed them next month or in the next few months because all of my money, unfortunately, um, you know, it was an investment decision that
Yeah.
person made. But yes, all of their money was
And,
tied up in Celsius, and and that's what I meant. On top of that, now you have the FTX situation, which could be, we don't know. It's obviously too early to tell. It's the wheels of justice turn slowly, as they say, right? But I would venture to guess there's a lot of millennials, a lot of young people who had money in FTX that were trading, right?
but they
Perhaps,
did. They bought
you know,
FTT tokens. They
you
wouldn't have
know,
invested. You
um,
have investors like Kevin O'Leary, right? Mr. Wonderful
right, right, right,
Shark
right,
Tank.
right.
Like
Yes, yes, yes,
you
yes.
know, he'll go on last year and he'll talk about how lovely it is to invest at FTX. And by the way, I'm also a paid sponsor and all this other bullshit. And then now he has no idea. He has no clue. He has no clue what happened to his money. Okay,
Hmm.
nobody has any idea yet. The forensics, the jury is still out on all that forensic play.
Hmm.
And that's when things get really complicated. And by virtue of it being complicated, you're more likely to lose everything. And coming back to Celsius, how many times has somebody tried to open up some sort of a brokerage account or something else with a traditional Fidelity or whatever,
Hmm.
Ameritrade, E Trade, anything like that? And how many questions are you asked before you're able to open up that account to see what your risk tolerance really should be? Whereas in the Web3
Right.
space, you have money, no problem.
Go
You want to
ahead.
invest in the highest yield product we have? We'll take it. We'll take every penny you got.
Well, I think some of those controls ultimately are gonna come from the regulators, like you said.
Correct.
I mean,
We would hope. We would
that's
hope that they do.
part and parcel. I
Yeah.
mean, that they would apply some of those things that they know work, right?
Mhm.
In the fiat investment space to apply to apply to Web3 crypto going forward. I guess one of my last questions on this topic would be, what do you think firms need to do right now? Because right now we're in a crypto winter, arguably, right? The prices are subdued, as I would say, right? And there's predictions as always going around that it's going to fall. Bitcoin's going to fall even further. Tim Draper just said no, it's gonna go up to 250K by the end of next year. Things like that. It seems like right now is actually an interesting time to be behind the scenes and actually improving and working to improve things internally for companies like yours, other people in the crypto and Web3 space, because there's a lot of things to learn. We sort of learn new things every week. We could uh, companies can take that and run with that to improve their services, so
Yeah.
that when the dust clears, so to say, or the clouds clear, hopefully, right, and there's renewed interest in crypto going forward and in Web3 generally, that companies are a lot better positioned to protect their investors and their customers, but also ensure steady operations, no downtime, transparent services, et cetera, et cetera, et cetera.
Well, yeah, you're bringing up some really interesting points because, I mean, look, downtime and all that stuff, that's technology fails. This past week, there was a very large hosting provider called Rackspace.
Mm-hmm.
They used to be one of the top, if not the second biggest managed hosting provider in the US. This was
Mm-hmm.
before Amazon really took over.
Uh-huh.
And they've all their clients' email has been down for days, and there was some sort of attack that they still haven't been able to resolve. So technology fails. That's just a given.
Mm-hmm.
If you're making an investment based on the uptime of technology, then yeah, you're going to have a
But I'm saying, broadly in general terms about all this stuff.
well. Look, when you have your Cogni wallet and you want to back up your key, you know what you could technically do? You could just write it on a piece of paper. You could write a 12-word mnemonic phrase, sorry.
Mm-hmm.
And you write it on a piece of paper. And you take that paper, you fold it up, put it into an envelope, and you put it in a book. And you leave it there until the time you need it. When you do need it, you pull it out, open up any wallet, doesn't
Mm-hmm.
have to be Cogni, any wallet, you plug in that phrase, your funds come back. Okay, all your assets come back. You've basically unlocked your wallet again.
Mm-hmm.
So it's not really that dependent on uptime, really. In fact, assets that are stored by our users on the wallet are not dependent really on our uptime
On
at
anything.
all. Only once our exchange feature is ready to roll out, then if you want to buy
Hmm.
and sell, then you do that. Or if you want to swap, then you would do that. If you want to integrate with Web3 platforms and the whole lifestyle experience, then you would do that. Yes, then technology obviously comes into play. Up until that
Hmm.
point, yeah, it doesn't.
Yeah, that makes sense.
Yeah.
All right. So, last couple of questions are sort of personal in nature. Like we said in the beginning of the podcast, we haven't seen each other for a long time. Are you still in New York? So many people migrated to different cities, towns, states, countries over the last couple of years due to COVID.
Mhm.
Where is Simon today? Is he still in New York?
I'm still in New York. Yeah. My office is located in Soho, so we're a block or two from Canal Street.
Uh huh.
This is where the Cogni office is located. We're actually upgrading in February. Across the street, getting a bigger space. We've got a lot of people that are joining the company. We're expanding a
Hmm.
little bit. And then we have also all kinds of different objectives internationally. But yeah, I've been, I started my career almost 20 years ago, and it started in honestly in IT. I was just an
Hmm.
IT guy, and
Hmm.
I was building local area networks, and I was starting to dabble a little bit in web development. And then one thing led to another, and I got a hold of a client that needed my help building a cluster for their black box system. So this was the first time I was introduced to FX, was
Hmm.
through a quote family office, and that was led by a dude that had multiple PhDs. He actually had a heart valve with his name on it. Like he had patients around the world that had his heart valve.
Hmm.
So he was really a brilliant guy, and he built this algorithm around actually the heart valve, the different turbulence theories that he was looking at when he was building the entire plane surface of the valve. So he was implementing a lot of math. He created some new theorems around it, and he was like, you know what, shit, maybe I should introduce some of these things in the financial markets. Maybe it'll work.
Uh huh.
So he built his black box. So that's how I got to become aware of foreign exchange. And then one thing led to another. I went out and I got my Series 3 license. So I became a commodity trading advisor. And then I started
Hmm.
introducing customers to FX, helping them with their automated strategies, etc.
Hmm. Hmm.
And that was the beginning of the end for me in fintech. At that point, then I launched Gallant FX. Dodd-Frank bill came out in 2010 and said, "That's sorry, Simon. That's not going to happen. It's not going to happen for you, buddy.
Right.
You tried your best, but it ain't going to happen." And you know, tried doing other things, didn't really work out. A couple years later, that's when I started Ibanez, which was
Hmm.
a white label platform to offer exchanges. So we built our own exchange, and then we started white labeling and customizing and deploying it all over the place and doing things like that. And it started taking off. But crypto winter again at the peak, and I said my goodbyes, left, started doing other things with Epiphany and with VV and with other companies as well. So that's kind of like
Hmm.
a 5 minute intro in the last 20 years.
And all in New York, right? I mean,
All in New
this is
York.
all
Yeah.
in New York, so
Yep.
you're a true diehard New Yorker. That's awesome. I mean, so am I. I'm living outside of New York City proper these days, but haven't made the jump anywhere myself either. Last question, Simon, and I could see our audience probably won't see the video, but I see you're wearing a New York Yankees hat. So I guess Simon still collecting hats, wearing hats. Is it like a hobby of yours, or you just
It's not.
always have to have a hat on your head, or do you collect them? I mean,
I don't collect. So okay. So do I have a collection? Technically, I have a collection. It's not
okay,
necessarily that I have a collection of hats. That I want to make sure I have every Major League Baseball team.
okay,
No. I'm born in Brooklyn. I'm a New York kid.
yeah,
Ever since I was a kid, I was just my first hat was a Yankee hat, and my
yeah.
second hat was a Yankee hat, and then my third hat was a Yankee hat, and then that's it. I couldn't break the cycle. So
Hmm.
every time I need a new hat, it's always a Yankee hat. I don't really. I think I tried an Adidas hat for a little bit. It didn't agree with me.
You mean in terms of the style of the actual hat itself,
When I look
or
in the mirror,
what's displayed on it?
well, you know what? That's a good question because there's so many different variations of styles. Like I can get
There
this
are.
this guy,
Hmm.
and this is it has a Velcro on the back.
Yeah.
I
Uh huh.
think it's a 74. Is that what
Yeah, or 47 brand.
47,
Yeah,
sorry.
47
47.
brand.
Yeah, so there's different numbers to them, different configurations to them, different stuff like that. This one is the one that I like the most simply because it has the Velcro and I don't have
You
like
could
any
adjust it.
metal. Yeah, it lets me adjust it pretty easily.
Yeah, yeah.
So, but I did at one point. I admit I was at a low point. I was in Boston and I walked into a restaurant wearing a hat similar to this one into a restaurant in Boston. It didn't go over very well.
You got accosted for the New York Yankees?
The staff at the restaurant were giving me not just dirty looks, but actually one of them said, "I don't think you should wear that in here."
That sounds like a plausible thing for someone in Boston to say to someone who's wearing a New York
A
Yankees
Yankee
baseball hat. I
Absolutely.
can't say I've had exactly the same experience, but something similar.
Very similar. I'm sure.
Very similar, yeah. But I was just wondering because I'm also a hat guy, but I'm not necessarily like the New York Yankees hat is the quintessential like baseball cap, right?
Mm-hmm.
Around the world, you can find them everywhere nowadays, and but I guess for the audience, people in the audience that probably American audience would know this better. There's different styles of hats in the United States,
Oh, yeah.
right? What you're wearing right now is I would call it a baseball cap because it hugs your head, very well. There's also this thing, I believe it's called a trucker hat, where a trucker hat, the front of the cap or
And
the
it's all
or the
like mesh
hat,
to the sides. Yeah.
it's very tall, so your
Uh-huh.
head looks a lot bigger sort of, and kind of your head's usually too small to fit into the whole thing. Yes, so the way that it's cut, and whether or not it has mesh in the back is sort of a different story, but that's kind of one of the variations that I always see, and I always have trouble finding a hat that fits my head properly, so I don't look like an idiot, or I don't look too young, or I don't look too old, or something like
I
that.
would recommend. Again, I'm not a hattie. Like I
Yeah,
don't
yeah.
make a business of like knowing everything about hats. I've just been wearing a hat for so long. But what I would say is that you probably want to go to like one of those. I know here in Soho, there's at least one of them. It's called Lids.
Yeah, oh, yeah, lids. Yeah, yeah. The store that.
Yeah, you go there and you can just shop around, ask them. They'll make some recommendations and stuff like that. But yeah, I know exactly what you're talking about. Where the hat is way too big for the head or way too small for the head, it's also doesn't feel good.
hmm
And that's another reason why I like the Velcro because it's easy to, if my hair is growing
Adjust.
out, I have more of it, and I need to, open it up a little bit or tighten it up. It's much easier with the Velcro than with anything else.
Yeah, that's pretty awesome.
Yeah,
Well, Simon, listen. I think our time's just
I think it's up. Yeah,
yeah, it's just about up. I wanted to thank you very much for joining us. I wish you and Cogni success in rolling out, all these new features. Happy holidays as we approach the end of the year, and all the best in 2023. Hopefully, sometime next year we can have another follow up, another catch up,
yeah,
and you will give us a rundown of how Cogni is doing with all of these added features and services that are rolling out. Like you said, Q1, Q2, next year and
yeah.
beyond.
We'd love
Um,
to. Yeah, Nicholas, thank you very much for taking the time as well. I appreciate it. Great catching up with you too. A lot of stuff happening in 2023. I think that we're going to probably have a few more discussions like this, and we're also going to be opening up, at least once we move to the new office. We're going to
mhm.
start doing a lot of broadcasting ourselves
Okay.
because simply we have a network of sports people. All these people keep coming into the office and stuff. So we wanted to kind of like start to grow that community and start to create more awareness on the
hmm
Web3 side of things as well. So
hmm
yeah, there'll be a lot of things we'll talk about, and I'd be happy to loop you in.
Cool. Awesome. Perfect.
Great.
Well, thanks, Simon. Enjoy the rest of your day, and we hope to speak to you soon.
You
Thanks.
got it, man. I appreciate it. Take care, Nikolai.
Thanks for listening to our latest Finance Feeds podcast episode. For sponsorship opportunities or to become a guest, please email us at info@financefeeds.com.